First lesson, never make things worse. Price can keep going. So although this is vomiting, if you weren't short, were there places to possibly maybe take longs? Sure. But you better see money, take money, and you better never make things worse by moving your stop or adding to a counter trade. Period. End of story. Don't do it. So yesterday was a great reinforcement of the lesson, never make things worse. Lesson number 2. You should have lockout risk settings. Yesterday, I published a video actually on Tradeovate of how to set those risk settings on your cash and demo accounts. You want to have those lockout risk settings in. This is the type of day that people entirely blow their accounts. They keep countering this move. It's already down 150 points. Surely it's going to turn around now. Nah, it didn't. So those lockout risk settings will protect yourself from yourself. You took your daily loss limit. Oh, well, that happens. The goal is to keep the powder dry so you can trade another day. Lesson number 3. When you are in trend and you want to counter trade, you've got to have those rules established. And one of the things we talk about doing is taking only the second counter trade. So in other words, price is coming down. You're looking for a long. Well, you might have this first ladder. Don't take it. Wait for there to be a second ladder. Okay, this is the second entry. That never presented itself on this move on a 3-minute chart for sure. So we've been talking about for weeks now, when can you short an uptrend? Well, it's the same thing, but opposite. When can you long a down move? You'd better have those rules in place so that you know when you can do that. Sorry, my one of my programs just closed on me. So, number 4, when price is not respecting levels, stop trading. Period. End of story. We're really good at drawing bounce levels. And when price is proving to you it is not respecting levels, don't trade. Yesterday, if you were on Zoom on this down move right here, I was telling traders, do not trade this. We need to wait until it bounces off 2 new levels. This down move was not respecting levels at all. And maybe that was foreshadowing to the day. But if price is not respecting your bounce levels, just stop trading. Something is off because it bounces 98% of the time. So the 2% that it's not respecting bounce levels, just don't trade. Period. End of story. Lesson number 5. The 8-point candle rule will save your butt. The 8-point candle rule will save your butt. If you're new to our system, when we have 8-point candles, I'm going to turn on our essentials indicator. So I'm going to turn it off and I'm going to turn it back on. So you'll see that the blues are a certain color, then the blues go darker when I turn on this indicator. This tells us this is an 8-point candle, an 8-point candle. That's pretty big. And what we've discovered, or I've discovered, here, let's measure this candle right here. Let's measure this candle. Okay. So 22-point candle. You can't trade with our typical stop loss in 8-point candle land. Our conventional wisdom is when you start having 8-point candles, you don't trade until you get 2 bounces with no new 8-point candles. Just following that rule, would you have taken any trades in here? Absolutely not, because they were all 8-point candles. We didn't see that settle down until basically the overnight. The overnight has not had any 8-point candles, no 8-point candles, no 8-point candles, no 8-point candles. So that 8-point candle rule is a bummer sometimes because you're not getting as many trades as you would like, but it keeps you safe. It is not a bad rule to follow strictly. The more conservative you want your trading to be, the more that rule is critical, the 8-point rule. The sixth lesson of yesterday: when you start vomiting, and especially if you get through a strong level that says watch out below, and it starts to become true, what you want to do is, if you have any lines on your chart, previous day lows and highs and backsides and whatever, and you have all these lines on your chart and you start vomiting. Let's go to a 3-minute chart real quick. And you start vomiting. What I recommend you do, I did remove all my lines, so lines removed. But what I should have done, one extra step, in all honesty, is remove even the strong levels. Now you can see the chart so clearly. So when you start having an aggressive move down or an aggressive move up, you want to remove all the lines off your chart and just look at the candles. Now, I would recommend you keep your essentials indicator on to where you can see the size of those 8-point candles, because it's going to help. If you're following the 8-point candle rule, it'll become real obvious what to do. We had 37 8-point candles yesterday. Yeah, that was quite a move. So those are 6 lessons I believe presented itself yesterday. And I hope that was valuable information that you could journal, contemplate on, and consider adding to your trade plans.
Stay green, my friends. And to learn more about our group, go to microstrader.com.